Hello, everybody, and welcome to Adjusting Journal Entries Part 14. This is revenue being recorded before it's recognized. So instead of recording unearned revenue, what if someone actually recorded revenue? And this can happen pretty frequently. We get a cash advance, and whoever it is records revenue instead of unearned revenue. So, and again, this happens a lot in bookkeeping. What do we do? Well, there's a few options. We can reverse the initial entry and then do a correction the way it should have been recorded and then adjust it. I'm not going to cover that in this video, but what we're going to do is the second part. We're going to adjust the revenue account to ensure that the services revenue reflects what was earned and unearned revenue reflects the future obligations. Remember, when we're doing adjusting journal entries, we never touch cash. And we're going to record, basically we want to make sure that our revenue reflects what we've earned and our liabilities reflect our future obligations. So right over here, on September 1st, JFK received $90,000 cash from SNA. JFK will perform the services for SNA for a period of 1 year at a rate of $7,500 per month. And again, if we say 7,500 times 12, we're going to get a total of $90,000. On September 1st, JFK initially recorded the transaction as a debit to cash and a credit to services revenue. Assume that JFK performed the services from September 1st through December 31st. Prepare the adjusting journal entry on December 31st. So we're not doing the reversing entry. This is an adjusting entry. So the question I have is, well, how much revenue should we have recognized? And if we look at this over here, well, we did work for September, October, November, and December. And this is going to be $7,500 each month. So the total amount of revenue that we should have recognized is going to be a total of $30,000. So the amount of our services revenue should be $30,000. This is going to be the correct balance on December 31st, 2022. Now, how do we get from 90 to 30? Well, 90 minus what is 30? It's going to be $60,000. I'm going to debit services revenue for 60. Again, this is a weird one because they went through and recorded revenue when they should have recorded unearned revenue. And then over here, we're going to credit unearned revenue. Now, we know that this number is good because it reflects what we've done during the year. But is the $60,000 good as well? Well, over here, we're going to be performing services for the next 8 months. So over here, it's going to be January, February, March, April, May, June, July, and then August. We're going to be charging them $7,500 a month for each of these months, or a total of $60,000. So the unearned revenue that we just booked reflects our future obligation. So we know that we've done this question correctly. So what I'm going to do now is to do the adjusting entry on 12/31/22. I'm going to go ahead and debit services revenue. I'm going to credit unearned revenue. And this is going to be over here for 60, and then also over here for 60. And this is going to be to adjust consulting services revenue. Again, this is a situation where there was kind of an error that was made because when they got the money, they should have credited not services revenue, but unearned revenue. But what happens if you're in a situation like this, right? What we're going to go through and do is we're going to ask ourselves those questions. Does our revenue account reflect what we've earned? It doesn't. It reflected 90. It should be 30. So how do I get from 90 to 30? I'm going to have to subtract 60, and I do that by doing it on the opposite side. Credit unearned revenue. This now reflects our future obligations. So I want to thank you for joining me here today in this video. Please leave any kind of questions you might have below, and appreciate your liking and subscribing to these videos. I look forward to seeing you on the next video. Have a great day.